Morning, students. Welcome to today's session of online class. Students, we were discussing the chapter financial statements of not-for-profit organization. In our last class, we discussed one of the financial statement, that is receipt and payment account. Today, we will learn about income and expenditure account. Not-for-profit organization prepare income and expenditure account at the end of the accounting period to determine surplus or deficit. Income are credited to this account while expenses and losses are debited. The difference between the two sides is either surplus or deficit. If it is surplus, it will be added to the capital fund, whereas deficit is deducted from the capital fund in the balance sheet. So this was a small outlook about the income and expenditure account. Moving further, income and expenditure account is prepared at the end of the accounting period. Like any financial statement, income and expenditure account is also prepared at the end of the accounting period. While preparing this income and expenditure account, we have to match the revenue receipt with the revenue expenses. Doing so, we can determine the surplus or deficit. In our previous class, we have discussed that not-for-profit organization, they function not for profit, but their main motive is to provide service to the society. So while doing so, if they incur any profit, that will be termed as surplus. If they incur any loss, it will be termed as deficit. So if they are earning profit, we can call it as surplus, and if they are incurring the loss, it will be termed as deficit. Income and expenditure is prepared following accrual basis of accounting. Last class we saw that receipt and payment account follows cash basis of accounting. Only cash transactions are recorded in the receipt and payment account. But in case of income and expenditure account, we follow accrual basis of accounting. In our plus one class, we have discussed about the accrual basis. Accrual basis means both cash as well as credit transaction will be recorded. Let us go through this point in details. First one, revenue expenses. Revenue expenses for the accounting period are taken whether they have been paid or not. So when we make entry in income and expenditure account, we have to check that we record the revenue expenses of that particular accounting period. So the accounting period which we are following presently, that accounting period revenue expenses will be recorded whether we have paid or not. Second point is revenue income for the accounting period are taken whether they have been received or not. In the same way, if revenue income of that accounting period are taken or are recorded in income and expenditure account whether they have been received or not. Next, third one, non-cash expenses such as depreciation are accounted. So in receipt and account payment account, we saw that only cash transactions are recorded. But income and expenditure account, they record non-cash expenses also like depreciation. Next, fourth point is capital expenditure. For example, purchase of any land, building, any assets are not considered because they are shown in the balance sheet. So when we prepare income and expenditure account, we have to note that if we are purchasing any capital expenditure, if any, will not be considered. Okay. Fifth point is capital income or receipt. Like we don't record capital expenditure, in the same way we will not record the capital income or receipt. For example, donation for specific purpose are not considered. Suppose a donation for building, if anybody is giving donation for building, construction of a building, so that is a very specific purpose. We can use that donation only for construction of building. So that will be termed as capital income, and that will not be recorded in the income and expenditure account. So when we prepare income and expenditure account, you have to follow this rule. Okay, these things have to be understood very properly, then only we can do the work correctly. Here are the features of income and expenditure account. The first feature is nature. What is the nature of income and expenditure account? It is a nominal account. In our plus one class, we have studied what is nominal account. So in nominal account, debit side we record all the expenses and losses, and credit side we record all the income and gain. Same is the case with income and expenditure account. In our income and expenditure account debit side, we will record all the expenditure, that is expenses and losses. And in the credit side, we will record all the income and gain. So what is the nature of income and expenditure account? It is nominal nature. Okay, nominal account. Second point is basis of accounting. It record income, expenses and losses of revenue nature on accrual basis of accounting. So both cash and credit transaction of that particular period will be recorded. Okay, income, expenses or losses of revenue nature on accrual basis of accountings are followed by the income and expenditure account. Third point, accounting period. It records only those income, expenses and losses which relate to current accounting period, whether paid or not. It is irrelevant whether we have received cash or not. When we record the transaction in income and expenditure account, when we do the posting, it is irrelevant whether we have received cash or not. It is important that we are recording the transaction related to current accounting period. Okay, so income, expenses or losses which are related to the current accounting period, whether we have received or not is secondary things. Current accounting period transaction should be recorded. So if we have received the amount of previous year or received some advances, that will not be considered in income and expenditure account. That we have to remove from that, only current year transactions will be considered. Fourth point is opening and closing balance. We saw that in receipt and payment account we have balance brought down and carried down. But in case of income and expenditure, we does not have an opening balance. So income and expenditure does not have an opening balance. Its balance at the end is either surplus or deficit, which is transferred to capital fund in the balance sheet. Okay, so it does not have opening balance, but in closing balance we may have surplus or deficit, which is transferred to capital fund in the balance sheet. The last feature related to income and expenditure account is adjustments. This account is prepared on accrual basis of accounting, and thus all adjustments relating to prepaid or outstanding expenses and incomes, provision for depreciation or doubtful debts are made. We saw in receipts and payment account, we will not record such transaction like outstanding, provisions and prepaid. Such transactions are not recorded in receipt and payment account. But in income and expenditure account, we are supposed to record all the adjustments on accrual basis. As it is following an accrual basis, we are supposed to follow the record all the adjustments. So this was about the features of income and expenditure account. Now let us see the format of income and expenditure account. Here we have to write at the top, we have to write the name of the company. Then we have to write income and expenditure account for the year ended. Then we have debit side and credit side. Debit side, it's expenditure side, all the expenses we have to record on the debit side, and all the income we have to record on the credit side. Remember, receipts and payment account is different and income and expenditure account is different. Receipt and payment account is like cash or asset account, and income and expenditure account follows nominal accounts. It is like nominal account. So all the debit side will be expenses and losses, and all the credit side will be income and gain. Okay, so you can see here salary, rent, insurance premium, such expenses are recorded on the debit side, and subscription, which is one of the income of non-profit organization, is recorded on the credit side. So all what is received as an income will be recorded on the credit side. And at the last, what we have to do is make a total of income side and make the total of credit side. Whichever side is short, we have to write the surplus or deficit. Okay, if income is more than expenditure, then that will be surplus. If your expenditure is more than your income, it will be deficit. Okay, so this was the format of income and expenditure account. So students, now it is time to conclude today's session. In today's class, we have discussed about income and expenditure account. We saw that income and expenditure account follow nominal account rules. We also saw the different features of income and expenditure account. We saw in detail what are the items which should be recorded in income and expenditure account and which should not be recorded in income and expenditure account. Only when you are thorough with this concept, it will be easy for you to do the problem. In our next session, we will discuss about the problems related to income and expenditure account. So till that time, goodbye.